Well, a lot of banks are in trouble thanks to the reckless monetary policies of central banks around the world. Particularly the Federal Reserve, the the European Central Bank, the Bank of England, Bank of Japan. They've kept interest rates at zero or in some cases negative for a decade or so, maybe in more in some cases. They've also greatly expanded their balance sheets through quantitative easing programs where central banks have been artificially manipulating the price of government debt and basically by extension all debt. And so as a result, a lot of these banks are now the owners of longer term government obligations and other obligations like mortgage-backed securities that now, in an environment where the Fed has finally decided to allow rates to rise to fight off the inflation that it created. Remember, the inflation that we're experiencing is a direct consequences of the mistakes that these central banks made. So the same mistakes that are responsible for unleashing the inflation are the ones that are responsible for the banks now being insolvent. And so as the central banks are, raising rates to fight inflation, they are exposing these insolvencies because now the value of the bonds that the banks own is dropping. And so when depositors want their money back, it's not there because it's been lost, because the market value of these bonds isn't equal to the deposits. Now, if the depositors are willing to wait 10, 20, 30 years to get their money, maybe they can have it. But they don't want to wait that long. They need their money now, especially since costs are going up. They need more money to pay higher prices. And because there's a way to get yield now, because all these banks, because they've already committed their deposits to these long-term obligations, they're collecting very low interest rates, maybe 1%, 2%. But depositors can take the money and put it in a money market, loaning it to governments, and get, in the U.S., they can get 4 or 5%. So, it's easy math to do. The banks can't raise rates because they've already committed the money to lower yielding assets. So depositors want their money so they can put it someplace else to get a higher yield, but the banks don't have it. Right? So this is a problem. I was warning about this specific problem as well as many others over a decade ago. I knew what the end game was going to be. I didn't know how long the game was going to be played. I just knew how it was going to end. The soon part, that's hard to say. And how do you define soon? Next week, next year? Hard to say.
Right.
But I do believe that it's going to change. The only question is when. This is a privilege that the United States has enjoyed going all the way back to the 70s. It was something that I think the Nixon administration got the Saudis to agree to in exchange really for our defense of their regime. And that was done following the decision by Nixon to suspend redemption of U.S. currency in gold. And since the U.S. dollar was no longer backed by gold, Nixon decided, well, we need to back it by something. And he was able to back it by oil in Saudi Arabia and the rest of OPEC, because now you needed dollars to buy oil. So it created a use for those dollars. And so it allowed America to run trade deficits because people needed dollars to buy oil. If they didn't need them to buy American products and they couldn't use them to get gold, they could use them to acquire oil. But I think that the world, for many different reasons, wants to move away from providing the United States with this privilege, because it doesn't come, for free. There is a huge cost that the world bears in terms of a lower living standard and lower consumption, because it helps, support American profligacy. Americans get to live beyond their means, and to make that possible, the rest of the world collectively lives beneath its means. And so there is a economic cost to having the dollar as a reserve currency. But now there's another cost, a political cost, because the United States has weaponized the U.S. dollar, and we are using our dollar status to punish countries that don't do what we want them to do. Like, look what's happening with Russia. So that's sending a very powerful message to the Saudis and everybody else to de-dollarize because they are vulnerable. It's like putting your neck in a noose and then throwing the end of the rope to your adversary and hoping they don't pull it. So I just don't think that they want to do that. And so I think there are a lot of reasons now to de-dollarize, and I think that's already in the process. And so it's just a question of time. And again, I don't know how many more days, but the dollar's days are numbered as the reserve currency, as are its days as the unit of account for oil in the OPEC nations. Well, first of all, yeah, when you look at the S&P making new highs, it was a handful of stocks that are responsible for the new highs. So most stocks did not make new highs in 2021. But the reason you had certain stocks make new highs, and those stocks were disproportionately weighted in the S&P, that was the monetary and other policies during COVID. Because what happened in COVID is the central banks flooded the economy with new money, and a lot of that new money went to buy stocks. A lot of people were sitting at home with nothing to do, and all of a sudden they had a lot of money and they had nothing to spend it on, so they decided to buy stocks. Right? You have a lot of Americans, with brokerage accounts that are on their cell phones, and they were buying stocks. And of course, the stocks they bought were the FANG stocks, these stocks that did make new highs. They got sucked into those, as well as some other meme stocks. They also bought some cryptocurrencies and NFTs and crap like that. But also, perversely, the FANG type stocks were the ones that specifically benefited from the COVID lockdowns, because their ability to make money wasn't impaired. In fact, it was enhanced, because a lot of people were stuck at home and they couldn't spend their money, in the normal way that they would on other services or at other brick and mortar stores. All that extra cash, to the extent that consumers spent it, went into these few highly speculative names that are heavily weighted in the S&P. And so that helped, get the speculation really going in these stocks. I mean, people just saw the momentum, and everybody wanted, these lockdown plays. And so all the money was just going to these stocks. And since they were going up, the momentum attracted even more money, which kept the momentum going. And so everything kind of hit new highs in that mania. And at the time, I looked at what was going on and I said, this has got to be the end of it. This has got to be the blow off top, not only for the bull market, but for the bubble. Because normally when you have a long bull market like the one we had, which becomes a bubble, it ends in some spectacular melt up, right? A blowout. And that's really what we had in 2021 with the new highs in these FANG stocks, as well as the interest in meme stocks and NFTs and cryptocurrencies. I think all that hit ahead in 2021, and now the air is coming out of these bubbles.